What's up, guys? Welcome back to another Forex video, man. Hope y'all are doing good as usual. But you guys see the title of this one. We're going to be going over one of my strategies that I use for USD pairs. It's a pretty simple strategy, so if you're new to trading and you're kind of looking for a simple way to start getting into setups without too much complication, stick around because this is the video for you. If you guys are new to my channel, make sure to check out some more of my other videos and consider subscribing for more content just like this and a whole bunch of other stuff. And leave a comment and a like, let me know if you like the video or not. But anyway, man, getting into the video, I've got a screenshot of pretty much the outline of this strategy, showing you guys what everything consists of and whatnot. And we're gonna be doing this on GBP USD. Like I said before, USD pairs work very well for this strategy, but not all the time, because keep in mind, guys, no matter what strategy you use for Forex, you're not going to win 100% of the time. Basically, the first thing we're going to do is develop a bias, and a bias is basically, if you think it's going to go up or down, okay? So right here we see this blue uptrend line that I have going up, obviously. You can see that price bounced off of this trend line a total of 1, 2, 3, and a fourth time up here, confirming that we are indeed in an uptrend and the slope is obviously to the upside. Okay, so the reason why you want to do that and develop a bias, whether or not you think it's a up or down trend, is because it's just more simpler that way, guys. It makes sense because if you have an uptrend bias and you think the market's going to go up like it is here, then you're only going to be looking for buy orders, and you're pretty much only going to be looking for confirmations to buy the market, since it is in an uptrend and we can continue to see an uptrend possibly. So that's why you want to develop yourself a bias. But after you do that, you're going to want to identify the individual high and lows of the market. And keep in mind, you can draw these highs and lows in different ways. This is just how I found it to work best for me personally. But basically, you want to identify the lows and identify the highs. And again, right here, you have a higher low. And all that means, guys, is that this low point of the market is higher than the previous low. Okay, nothing too confusing. If it's kind of confusing, just rewind it or leave a comment, I will answer. But yeah, higher low, and after a higher low, the market usually make a higher high. If it's an uptrend, more often than not, it's gonna do that. And a higher high, all that means, you guys, is that this high that I'm looking at right now that the mouse is over is higher than the previous high. Okay, so a higher low is higher than the previous low, and a higher high is higher than the previous high. Therefore, we are in a clear uptrend and we can start getting more precise and trying to figure out where our entries are going to be in the market. But we're going to continue, so it keeps on making higher highs. Okay, a higher low right here, and some could argue that the higher low would be right here, but I chose to put it on the trend line just because it's more simple and more people kind of understand that. By the way, if I'm going too fast, let me know in the comments for next time, and I can kind of slow down my talking and just leave a comment and try to rewind it. Yeah, after this higher low right here on the trend line that we drew, it makes a higher high, which is next in our sequence, and next is a higher low, and then a higher high, then a higher low here. Didn't label it. That is the second thing you want to do. Just identify the highs and the lows once again, and you can draw it if you want, because I know some people are visual learners, and so am I, and that might help some of y'all. So draw it out on your first few tries. Just get a feel for whatever market you're in, preferably a USD market with this this strategy. Just figure out which way your market's gonna go, then identify the lows and highs. Okay, that's the second part. Now the third part of this strategy is using our Fibonacci retracement tool. Okay, now this is just a screenshot, so I can't exactly show you where the Fibonacci tool is in TradingView, but I'm pretty sure it's like the fourth or fifth box down, and all it says is Fibonacci retracement tool, and it's 3 little lines. But you want to get your Fibonacci retracement tool out, and for me, if there's a higher low that touches our trend line perfectly, right, like right here, you want to measure it from the bottom of that higher low and wait until it makes its higher high. Okay, this is going to be the top of your Fibonacci, okay, your Fibonacci retracement tool. So you're basically measuring from the higher low on the trend line basically to the high that it makes. Okay, so you measure from there, and basically if you look on the right, For me, in this strategy, I usually wait somewhere between a 50% to 78.6% retracement, okay? Because that's all that the Fibonacci retracement tool is doing. It's just measuring the percentage of the retracement. Because I just told y'all that I look for it to go somewhere between 50% and 78.6% retracement level. Right here, it only went to 61.8%. So you could have easily capitalized off of this trade right here. Plus, another great indicator, it touched the trend line again. It made its higher low on the trend line. So that's another thing. And then I went to the 15-minute, guys, and I drew a support line, which is just a horizontal ray. And the support, like I said, if y'all don't know what I'm talking about, go watch my support and resistance video. But basically, it touched the support line that was already predefined back here, okay? And it bounced off a couple times on the 15-minute, and that was another fourth indicator that we could have used to, you know, buy this market and capitalize like you saw here. Pretty much no drawdown at all, and it went straight to our take profit. But yeah, hopefully I did an okay job explaining this. I didn't want to confuse a lot of y'all. Again, to me, this is the most simplest way of trading that I've ever done in my trading career. And a lot of people seem to agree with me, you know, when I tell friends about it. So I thought I would just share it on this channel. But again, if it doesn't make sense to y'all, I will leave a link to this exact page where y'all can go to it and just study it, print it out if you need to, and just study it. Comment down below. Also, hit me up on Instagram for an even faster reply. I can answer all questions on there, guys. You know, watch the video again too if you need to. But again, hope this was helpful to somebody. Make sure to subscribe, turn the bell on, leave a like, and I'll see you guys in the next Forex video, man. Peace.